Good evening, everyone. My name is Peggy O'Neill, and I'm the chair of Vanguard Super. On behalf of the board, I'd like to extend a very warm welcome to all of you joining us for our 2025 annual member meeting. I'd like to begin by acknowledging the traditional owners of the land from which I'm speaking to you today, the Wurundjeri, the Wurrung, and the Boonwurrung peoples of the Kulin Nation, and to pay my respects to their elders, past and present. At Vanguard Super, we're driven by a clear vision, creating confidence for retirement through simpler, smarter super. It's now been just over 3 years since we launched Vanguard Super in November 2022. We saw an opportunity to do things differently, to build a super fund that's low cost, easy to understand, simple to invest in, and straightforward to manage. In the 3 years since launch, Vanguard Super has seen rapid growth, and we've delivered real value for our members. And in many ways, the 2024-25 financial year was our strongest yet. I'm joined tonight by my fellow directors, and I'd like to take a moment to introduce them. Joining us online are directors Ann Flanagan, Cynthia Louie, and Robin Bowerman, as well as two newly appointed directors, Jan Swinhoe and Taifi Watley, who commenced on 1 January 2025. Jan is an experienced non-executive director with over 30 years' experience across superannuation, insurance, and banking. Taifi brings extensive experience in financial services, most recently as Chief Strategy Officer at Australian Retirement Trust. We also welcomed David Stennett as a new director in August this year. David can't join us tonight as he's based in the United States, where he's a senior leader at the Vanguard Group with nearly 30 years' experience and deep expertise in retirement plan strategy and investment solutions. We're grateful to have the experience, insight, and diverse skills of all three new directors to add to the board's existing expertise, so as to strengthen our ability to serve members and to guide Vanguard Super's long-term success. I'd also like to acknowledge the Office of the Superannuation Trustee and our auditor who are joining us online this evening. Here's what you can expect from tonight's meeting. To start, I'll provide an update on Vanguard Super's progress and the board's strategic priorities. Renee Smith, Chief of Personal Investor at Vanguard Investments Australia, will then speak about the improvements we've made to the member experience. Duncan Burns, Vanguard's Chief Investment Officer for the Asia-Pacific region, will then provide an overview of our investment approach, recent performance, and the outlook ahead. We'll then move into member questions, facilitated by Martine Alpens, Head of Corporate Communication at Vanguard Investments Australia. And thanks to everyone who submitted questions ahead of time. You're also welcome to submit questions during the meeting. If we don't get to all of the questions tonight, we'll respond to those in the meeting materials, which we've made available online shortly. I also encourage you to review the Vanguard Super annual report for the year ended 30 June 2025 and the fund information booklet. These contain important information about your superannuation. You'll find links to these documents in the meeting notice email and on our website. The 2024-25 financial year was a remarkable one for Vanguard Super and our members. Our membership grew by 130% over the year to 30 June 2025, and we've continued to grow strongly since. As of 31 October, we had 48,010 members, compared to 15,811 at 30 June last year. At last year's meeting, I shared that we had reached $1.9 billion in funds under management. 1 year on, that figure has more than doubled. We now manage over $4.3 billion on behalf of our members. This growth reflects the trust each one of you has placed in Vanguard Super and our commitment to delivering value through low fees and smart investment solutions. On the investment front, we had another strong year, as Duncan will outline shortly, with our flagship Lifecycle option for members aged 47 and under, delivering a 13.55% annualized return since inception to 30 June 2025. We thank all of you who have chosen to transfer your retirement savings to Vanguard Super. We take our responsibilities to our members seriously. Australia's superannuation system now holds more than $4.3 trillion in retirement savings. By the early 2030s, it's projected to become the second largest retirement savings system in the world, behind only the United States. As a board, and as you would expect, we regularly review and refine our strategic priorities to ensure we're not only delivering value to our members now, but also preparing for the future. Some of the key areas we're focused on include fee transparency. We remain committed to keeping fees low and clear so members understand exactly what they're paying for and why. Guidance and advice. We're working to improve support for members who want help with their superannuation and their retirement. Technology and innovation. We're investing in secure digital platforms with a strong focus on cybersecurity. And growth and product development. We're constantly reviewing and improving our offering to ensure that we meet our members' evolving needs. These priorities reflect our long-term commitment to growing a super fund that is simple, smart, and focused on helping Australians retire with confidence. Thank you again for joining us tonight and for your trust and confidence in Vanguard Super. And I'll hand over to Renee, who will share more about the work being done to improve your experience as members.
Thanks, Peggy, and good evening, everyone. I'm Renee Smith, and I lead the Personal Investor Division of Vanguard Investments Australia, and this includes responsibility for Vanguard Super. As Peggy mentioned, we have a simple but powerful vision. We want to build confidence for retirement through simpler, smarter super. And it's this vision that guides everything we do, from how we invest your super to how we support you as members. Delivering strong long-term investment outcomes is a key part of this, and Duncan will speak to this shortly. But also core to our vision is ensuring that every interaction you have with us is not just easy, but it's helpful and empowering. So tonight I want to talk to 3 key areas where we're working to improve your experience as a member. First, we're investing in the digital experience, making it easier for you to engage with your super whenever and wherever it suits you. Second, we're building resources and tools to support you to make informed decisions about your retirement. And third, we're helping members connect with helpful guidance and personal advice so you can feel confident about your future. Let me start with the digital experience. For many of us, our phone is our primary way of managing our finances, so super should be no exception. And that's why we're continuing to invest in our mobile app as well as our web portal to make it easier for you to stay connected with your super. We've found that members who use the app are engaging more frequently and more meaningfully with their super, and that's exactly the kind of behaviour we want to encourage. We've recently rolled out updates to improve your app experience. This includes improved app performance, a simpler layout, and enhanced investment performance reporting. Cybersecurity is a top priority, and we've built in smart layers of protection to help keep you and your account safe. One of the simplest ways is biometric login, like Face ID or Touch ID. It's quick, easy, and adds layers of security without slowing you down. We also use 2-factor authentication. So when you log in, especially if you log in from a device we don't recognise, you'll be asked to enter a unique code we send to you. It's a simple step, but it makes a big difference in keeping your account secure. Over the next quarter, we are adding push verification as an upgrade to the current 2-factor authentication options. Now let's turn to education and tools. We understand that super and retirement, it can feel complex or even overwhelming, but we also know that those with a plan are 3 times more likely to feel confident about their retirement. That's why we're focused on equipping you with the right tools and information to help you make informed decisions. I think Future Forecast is a great example. It's a simple interactive tool available to you in the mobile app that helps you estimate your super balance at retirement, your income during retirement, as well as the impact of making additional contributions today. Thousands of members have already completed a forecast, and we encourage you to do the same. We've also expanded our library of educational content, covering everything from the basics of super to retirement planning. You'll find videos, articles and guides in the Learn With Us section of our website. Recently, we also launched a Smart Retire Quiz, another tool designed to help you feel more confident about your retirement. It takes less than 5 minutes and it gives you personalised results, including 5 actions that can boost your retirement confidence. These educational resources are designed to support you, whether retirement feels like it's a long way off or it might be just around the corner. So keep an eye out for an email after the meeting, which will include links to the Vanguard Super Learn website, the Smart Retire Quiz and Future Forecast. The third area I want to highlight is guidance and advice. We know Australians want help navigating their retirement journey. In fact, our research shows us that most working Australians, about 86%, think it's important for their super fund to be giving them support and advice both before and during retirement. And so that's why we've introduced a new retirement guidance service, making it easier for members to access general support from Vanguard's retirement specialists. This could include helping you locate any lost super, understanding your investment options, or learning about personal contributions. We can also guide you through opening a transition to retirement account or an account-based pension. It's quick and easy to book an appointment on our website, but just keep in mind this is a really popular service, so please, we recommend you plan ahead. For those looking for more comprehensive advice, we're launching a Find an Advisor tool next year to help members connect with qualified financial advisors. We also launched Advisor Plus this year. It's a new offering and it makes it easier for members and their financial advisors. If you have a financial advisor, they can now be securely linked to your super account, enabling them to provide better support and advice. As I close, I just want to take the opportunity to reiterate our commitment to continually improving the experience for our members. While we're pleased with the progress that we've made, we know that there's always room to improve and we won't be complacent. One of the things that we've heard loud and clear is that you want to see percentage returns in the app, and that's something we're working to bring to you next year. As always, we welcome your feedback. You can send us a secure message from your Vanguard online account or call our member services team. Thank you again for being part of Vanguard Super. We're grateful for your trust and we look forward to continuing to support you. I'll now pass over to Duncan, who's going to speak about Vanguard Super's investment approach and also performance.
Hi, I'm Duncan Burns, Vanguard's Chief Investment Officer in the Asia-Pacific region. Thanks for joining us this evening. I lead Vanguard Australia's investment management team of approximately 65 investment experts who look after $4.3 billion for Vanguard Super and $1.2 trillion that the Vanguard Group has invested across Asia on behalf of everyday investors and members like yourself. Superannuation is one of the most important investments you'll ever make. Tonight, I want to lift the lid on how Vanguard Super is helping members like you grow and protect that investment for the long term. I'm going to cover 4 topics. Firstly, I want to talk about the power of indexing, a key pillar of our investment approach. Second, I'll shine a spotlight on the smarts behind our flagship lifecycle product, the Super strategy that grows with you. Third, I'll touch on the impressive performance of your super investment options in the financial year 24-25. And finally, I'll close with our outlook on the markets for the next decade. Let's start with how indexing fits into our investment approach. There are 2 things here. First, you got to have a solid framework to guide your investment decision, and the power of indexing is a cornerstone of ours. Second, markets have ups and downs, and having an investment approach you believe in grounds you so you can be a long-term investor. It helps you make well-thought-out investment decisions and build a portfolio. Nearly 50 years ago, Vanguard's founder, John Bogle, launched one of the world's first index funds, the Vanguard 500 Index Fund. And he realized something very important. Yes, it's possible to beat the market, but the odds of doing so over the long term are so low after fees that most investors really shouldn't even try. It's an insight that stood the test of time, and today millions benefit from the diversification and low fees of index investing. And the evidence backs this up. S&P's annual SPIVA report shows more than 80% of actively managed Australian equity funds underperformed their benchmark after fees over 10 years to June 30, 2025. And we see similar numbers in markets all around the world. So why do we believe indexing will continue to deliver for our members? There are three enduring reasons. One, the increased professionalization of markets. Two, the difficulty of picking a winning stock. And three, indexing's cost advantage. Let's unpack those one by one, starting with professionalization. Decades ago, markets were filled with amateur investors, trading on hunches, tips, and gut instinct. But today, some 90% of the Australian and global markets are dominated by professional investors. Think super funds, ETF managers, active managers, and hedge funds. It kind of reminds me of my weekend cycling group. As the pace and distance picks up, the less experienced riders drop off. And by the time we're deep into the ride, it's only the seasoned cyclists left in the pack. Right now, markets feel like that final stretch of my ride. Many amateur investors and traders have dropped out over the decades, and it's mostly pros trading with pros. So unless you're one of the few with a genuine edge, you're better off owning the whole market through indexing rather than trying to outplay it. That brings me to my second point. Picking winning stocks is way harder than most people think. Broad market averages like the ASX 300 tend to rise over the years. That's why equities form the backbone of most super fund growth allocations. But the 300 individual stocks inside the ASX are all over the place, some up and some down, often with far greater volatility than the index. And picking a winner is not a 50-50 proposition, not even close. And this slide really brings it to life. Let me unpack it for you. Over the last 10 years, the ASX 300 has delivered an impressive 126% return. That's the yellow line in the middle. However, a whopping 81% of individual stocks have delivered below index returns. That's the red bars, with many stocks dropping 50% or more. But importantly, only 19%, that's some 60 stocks, beat the index, with a handful of stocks up 400% or more, driving the vast majority of index returns. See those green bars on the right. So if you're picking stocks as a long-term investor, you're not choosing between winners and losers in a 50-50 game. You're trying to pick a few needles in a haystack. And our broad-based indexing approach of buying the whole market ensures your super fund owns all these really big winners. Sure, you own the losers too, but remember, it's this handful of mega winners that drive the vast majority of equity returns. And importantly, you get all those with total market indexing. The third key advantage is cost, and I like to think of this as indexing superpower. Index investors typically pay far lower fees than those charged by active managers, and lower costs mean more of your returns stay in your account right where they belong. And I'm proud that more than half of our members are in Vanguard Super's Lifecycle option, named Money Magazine's Best Value MySuper product in 2024 and 2025. And the ATO's comparison tool also ranked it the lowest cost public MySuper product on a 50K balance as of 30 June 2025. Trust that we are laser focused on squeezing costs down for you. And if you're not yet with Vanguard Super, pay attention to your super fees. As magicians know, it's easier to pull off a disappearing act when people don't pay attention to the right things. So that's the story of indexing. The bad news is it's really hard to beat the market. The good news is you can still have a very successful super experience without beating the market. Indexing lets you invest in an efficient way, a diversified way, and a low-cost way too. That's why it's foundational to Vanguard Super's investment philosophy. Next, let's talk about the smarts behind our flagship lifecycle product. Indexing is only part of the Vanguard Super story because our lifecycle strategy builds on that with a sophisticated strategic asset allocation framework customized for Australians building and drawing down their retirement savings. Asset allocation, that's the decision about how much of your super to allocate to stocks, bonds, and other asset classes, drives the vast majority of member outcomes and is therefore one of the most important decisions members make. And our Lifecycle product is there to help you with that decision. At its core is a glide path, a long-term portfolio de-risking process that shifts from growth to defensive assets as you age. Informed by investment thinking, we've developed managing over $2.5 trillion in similar target date retirement funds worldwide. The goal of the glide path isn't just to grow your super, it's to manage risk along the way, helping you retire with greater confidence and stability. Vanguard Super's glide path follows 36 age-based stages and is built using a model that considers member demographics, risk tolerance, tax rules, and the age pension system to help support stable and sustainable retirement income. The strategy is designed to help protect your capital while keeping enough growth assets in the portfolio to support your long-term retirement lifestyle and spending goals. Our Lifecycle members, age 47 and under, start with a portfolio that's 90% in growth-oriented investments like shares, shown in shades of green on the chart, and 10% in defensive assets, such as bonds, highlighted in shades of yellow. From age 48 on, we automatically and gradually shift your mix of stocks and bonds each year towards a more conservative allocation. That's selling stocks and buying bonds until we eventually reach the most conservative posture, 40% growth, 60% defensive allocation by age 82 and beyond. Imagine being fully invested in shares, needing to retire just as the GFC hit or during the COVID-19 crash of 2020 and 2021. That kind of timing can really hurt your savings because you're starting to draw down your super when markets are down. The Lifecycle option is designed to smooth out those bumps, so big market swings don't throw your strategy off course. The goal is more stability and more confidence as you step towards and into retirement. Of course, confidence doesn't just come from a smoother ride. The investment returns of your super play an important role too. And I'm proud to report that markets were strong and we had another great year across Vanguard Super's investment options. Let's start with Vanguard Super's MySuper Lifecycle option. For members age 47 and under, returns were 13.47% over the last financial year, compared to the industry median of 11.89%. In fact, SuperRatings ranked us as the top performing MySuper Lifecycle product over 12 months to 30 June 2025 for a member age 45. Since launch in October 2022 through 30 June 2025, the annualized return for members 47 and under was 13.55%. Among our diversified options, high growth returned 13.48% for the year, growth delivered 11.76%, and ethically conscious growth 12.60%. Balanced returned 9.89%, while conservative came in at 7.79%. At Vanguard, we measure ourselves on long-term results, not what happens over any one-year period. 2025 returns exceeded expectations, but remember, superannuation is a long-term investment. It's best to think in decades here, and past performance isn't indicative of future returns. Let's now move on to the economic environment and our market outlook. It's worth noting that in the 2024-25 financial year, it wasn't without its challenges. The first half was relatively steady, while the second half saw some market volatility, particularly in April, as tariffs roiled global markets. But that's all part of long-term investing, and it's exactly where our low-cost, index-based approach continues to prove its value, helping members stay the course and achieve strong outcomes. Let's move next to our 10-year equity and fixed income outlook. In the short term, we could continue to see positive momentum in stocks led by U.S. equity markets. But when we think about the next 10 years, today's rich valuations and elevated profit margins in pockets may pose meaningful headwinds to long-term equity returns. For Australian equities, we forecast annual returns in the range of 4.8 to 6.8% over the next decade. Our outlook for global equities, excluding Australia, is slightly lower at 4.3 to 6.3%. On the defensive side, Australian bonds are expected to return 3.9 to 4.9%, while global bonds, when hedged, are in the 4.0 to 5.0 range, with much lower volatility than shares. So the takeaway for members is this. Coming off the back of an exceptionally strong multi-year bull market in equities, it's important to know that when stock valuations go higher, their expected future returns typically go lower. Long-term members should continue to benefit from diversified exposure to global equities, but the reality is it's likely time to temper expectations. While shares were the main driver of super portfolios over the last decade, we expect both shares and bonds to contribute more evenly over the next 10 years. For members in our default lifecycle investment option, we take the guesswork out of this for you because the glide path gradually adjusts your stock and bond mix as you age, reducing risk over time. We also automatically rebalance back to target portfolio when markets move to keep you on track. And for those who prefer a hands-on approach with your super, we share these forecasts not for market timing purposes, but as a guide to help you prepare your portfolio for the long term. I hope that's provided you with insights on how Vanguard Super's strong and steady strategy is built for long-term success. To recap, our low-cost, index-based investment approach and Lifecycle's purpose-built glide path are the cornerstones of a simpler, smarter super strategy built to help you retire with confidence. If you take one thing away tonight, let it be this. Long-term success comes from discipline, diversification, and low costs. Thank you for trusting us with your super, and I look forward to seeing you at next year's meeting. Over to the panel for the Q&A session.
Good evening, everyone, and thanks for joining us tonight. My name is Martine Alpens, Head of Corporate Communications at Vanguard Australia, and I'll be facilitating tonight's Q&A with our panel, Peggy, Renee and Duncan. Thank you to everyone who submitted questions in advance. If you'd like to ask something during the session, please use the Q&A chat box on your screen. Any questions we don't get to tonight, we will be answering in the meeting materials, which will be made available online in the coming weeks. We'll also share the minutes of the meeting and a recording on the Vanguard Super website. Please note we can't answer any questions that would disclose personal or confidential information. And just a reminder that this session is to answer questions from members about Vanguard Super. So if you have any questions about any other Vanguard investments, please contact our client services team who will be happy to assist you separately. Any information shared tonight is general in nature and does not take into account your personal objectives, financial situation or needs. All investments carry risk and past performance is not a reliable indicator of future returns. So before making any decisions, read the relevant product disclosure statement and consider seeking personalised advice from a licensed financial advisor. With that, let's dive into your questions. Let's start with one on fees, and we have one from a member here tonight who says, will Vanguard Super increase annual fees for members? Peggy, we'll start with you on that one.
Oh, well, I think that's a simple one to answer. We have no plans to increase annual fees for members. At Vanguard Super, our commitment to keeping costs low is at the heart of everything we do. We believe that lower fees mean more of your money stays invested for your future. Any decision we make will always be guided by our philosophy of delivering long-term value through cost efficiency.
Thanks, Peggy. So while we're talking about fees, another member has asked, as a lower balance long-term member, what steps is Vanguard Super taking to reduce or mitigate the drag of fees on small accounts over time? Are there plans to adjust the fee structure, such as tiered rates or fixed fees, so that members with modest balance aren't disproportionately disadvantaged?
Well, Vanguard Super's annual fees are designed to be fair and transparent for all members, and we don't believe those with smaller balances are disadvantaged. Our fee structure is entirely percentage-based to ensure fairness for accounts with lower balances. In fact, a member with a $50,000 balance in our MySuper option pays $280 a year versus the industry average of $456 a year.
Thanks, Peggy. The next question will go to you, Renee. What new features do you have in store for the next 12 months for the Vanguard Super website?
Thanks, Martine. We've got some great updates coming to the Vanguard Super website over the next year. First of all, we're adding tools to help with retirement planning, like a new Find an Advisor tool I referenced earlier this evening, as well as bringing our Future Forecast tool that's currently on the app to the website for those who don't use the app. We'll also continue to keep building out educational content. The Smart Retire quiz, for example, has been a real hit with over 20,000 completions. So we're looking at ways to expand on that. On the Secure portal, we're working to make it easier for you to review transactions, moving more forms online to cut down paperwork and to give the design a bit of a refresh to make it easier to navigate. So lots of improvements ahead, new tools, better usability and more resources to support your retirement planning.
Thanks, Renee. So we have an investment question next, and that'll be over to you, Duncan. What were the main drivers of investment performance this year?
Thanks for the question. As I mentioned earlier, both Australian and international equities performed strongly over the 2024-25 financial year. For Lifecycle and the diversified super options, those equity returns were a big driver of the performance. And to give you some context, if we look at Vanguard Super Save Smart single sector options, unhedged international shares returned 16.75% for the year, while Australian shares delivered 12.96%. On the defensive side, returns were more modest but still positive. Australian fixed interest returned 5.78%, global fixed interest hedged returned 4.63%, and cash returned 3.92%. And Vanguard Super has just passed its 3-year anniversary, and we've seen strong returns over that period, driven predominantly by rising equity markets. And if we look at our life cycle option, for members 47 and under, which is 90% growth, 10% defensive, the annualized return since launch in October 2022 to the end of October of this year is 14.51%. That is an exceptional result, and we are happy to have surprised to the upside. But when we look ahead over the next 10 years, we don't expect returns like that to continue. Markets are cyclical, and it's important to keep your expectations realistic. For the past 10 years, shares, especially US shares, have been the main driver of portfolio returns. But over the next decade, we expect a more balanced contribution from both shares and bonds.
Thanks, Duncan. We have a question for you next, Peggy. As someone who's recently moved from an established fund to Vanguard Super, what can you tell this member to provide confidence that Vanguard Super, while being new, is competitive and will continue to offer strong returns?
Well, Vanguard Super may be new to the Australian superannuation market, but Vanguard has been in Australia for more than 30 years, backed by Vanguard Group's 50 years of global investment expertise and proven track record of putting investors' interests first. Our strategy is centered on delivering simpler, smarter super, making it easier for members to have confidence in their retirement outcomes. And as you probably know, our MySuper Lifecycle option has delivered strong results, as Duncan highlighted earlier. We are also determined to keep our fees low for members. The early fee for our MySuper Lifecycle option is among the lowest in the industry across a range of ages and balances. As at 30 June 2025, the Australian Taxation Office's independent Your Super comparison tool ranked Vanguard Super as the second cheapest MySuper product. But ultimately, our goal is to combine Vanguard's best investment thinking, along with low fees and high-quality educational tools, to enable members to take positive actions for their retirement.
Thanks, Peggy. So next up, we've had a number of members ask if Vanguard Super will offer ETF-only investment options or allow direct ETF investment within super accounts in the future. Renee, let's hear from you on this one.
Sure. So we appreciate that some members are keen to access Vanguard ETFs within Vanguard Super, and this is certainly something that we are actively exploring for the future. Right now, our super investment menu is designed to be simple and provide access to our best investment thinking through our life cycle and diversified options, as well as the flexibility to build your own portfolio via our single sector options. So while we can't commit to offering ETFs within super at this stage, we are certainly considering your feedback and we'll keep you informed if there are any changes to our offering.
Thanks, Renee. Now, next up, here is one for you, Duncan. A question many have asked. We've had a few members ask why assets like gold or cryptocurrencies, such as Bitcoin, are part of Vanguard's super investment strategy. Has Vanguard considered including these asset classes, and are there any future plans to offer crypto exposure through super?
Thank you to the members who sent in questions about this, and let me address gold and crypto in turn. While gold may seem alluring to some as an investment, it's important to recognize its limitations as an asset class. And gold is not a productive asset. It doesn't generate any income. And unlike shares that pay dividends or bonds that pay interest or property that earns rent, its value relies solely on price movements, which can be unpredictable and often just keep pace with inflation. In contrast, productive assets like shares and bonds generate ongoing returns and build wealth over time, which is why we focus on them for our members' long-term benefit. That said, while Vanguard Super doesn't have any gold bars in the portfolio, it's important to remember that members have exposure through stock holdings. For example, some of the largest miners in the world are listed here on the ASX and in your portfolio. Now, crypto, especially Bitcoin, has certainly captured headlines with its recent volatility. And while it might seem exciting, we see crypto as highly speculative. It doesn't produce income or have intrinsic value like traditional investments, and its price is driven mainly by what the next buyer is willing to pay. So Vanguard Super applies strict principles before adding any investment to its lineup. We look for assets with a strong, enduring basis for positive long-term returns. So far, crypto doesn't meet that bar. But similar to gold, members do have some exposure through stock holdings of crypto-related service and exchange companies. And for many investors, chasing the latest fad or trend can lead to disappointment, especially when markets turn. Vanguard Super's approach is to help members stay disciplined, diversified, and focused on proven long-term strategies.
Thanks for that answer, Duncan. So the next question we have is about insurance. And a member has written, insurance costs via Vanguard Super, including income support, death and TPD, seem to be expensive. Are there plans to benchmark these costs to be sure it's a good deal for members? And I'll pass this one on to you, Peggy.
Thanks for the question. At Vanguard Super, we regularly review and benchmark our insurance premiums, the coverage options, and the claims experience to ensure our offer remains competitive and appropriate for our members. I also want to reassure members that we don't charge any additional fees or margins on these premiums. But when comparing insurance across super funds, it's important to note that premiums can vary considerably based on factors such as age and gender, occupation, and the type of cover that's selected. The terms and conditions of each fund's insurance cover can also vary significantly, which affects both the cost and the level of protection provided. We're committed to ensuring our insurance delivers value and meets members' needs, and will continue to review our offer. And if we identify opportunities to deliver better value for members, whether through better pricing, enhancements to cover, or improved claims experience, we'll make the necessary changes.
And we have another investment question, and I'll put it back to you, Duncan. A member has asked, can someone aged 55 have a high growth investment in super? This member started paying super only when they arrived in Australia in 2009. And they're 55 years old and they want to know whether they can have a high growth option.
So the short answer is yes. You can select a Vanguard Super High Growth option. That's 90% equities and 10% bonds as your fixed asset allocation. But here's the thing. Your asset allocation should reflect your willingness, your ability, and your need to take risk. If you have a long time horizon and stable income, you may be able and willing to take on more risk. But you also need to be honest with yourself about how you'll react when markets fall and whether you really need that extra risk to meet your goals. Before you make any decisions, I'd caution against performance chasing. The Vanguard Super High Growth option has delivered some really strong results, but picking an allocation based only on past performance can backfire, especially if your risk tolerance isn't as high as you think. It's common for investors to overestimate their comfort with risk during bull markets, only to sell out during the dip and do irreparable damage to their portfolios. For most people, the best approach is to pick a strategy you can stick with through the ups and the downs. And our default lifecycle option is designed to take the guesswork out of asset allocation, like trying to time the market, and help you stay the course. For a 55-year-old, our lifecycle option would have you in 72% growth, which declines in incremental steps to a minimum of 40% as of age 82. However, a different approach could suit you better depending on your situation. That's why we'd encourage you to speak to a licensed financial advisor who can consider your entire financial picture. Finally, keep in mind that, as I mentioned in our market outlook, coming off the back of an exceptionally strong multi-year bull market in equities, it's important to know that when valuations go higher, their expected future returns typically go lower. So long-term members should continue to benefit from diversified exposure to global equities, but the reality is it could be time to temper expectations.
Thanks, Duncan. So we've also had a number of questions about retirement. And one member asks, is Vanguard Super planning to offer regular webinars for members approaching retirement? And another asks, how is Vanguard Super improving support for retirees, both those preparing for retirement and managing their needs post-retirement? Let's go to you on this one, Renee.
Thanks, Martine. It's a great question and a very important topic. You may have seen an email from us last week sharing 2 new on-demand videos available on our website. One on super basics like finding lost super and making the most of contributions, and another on strategies to grow your super, including the carry forward rule. In the coming weeks, we'll launch a new video on planning for retirement, covering practical steps and the options available to you through Vanguard Super. We'll email members when it's live. Plus, of course, there are tools like the Smart Retire Quiz and Future Forecast. They're available now to give personalised insights and help you prepare. We'll keep building out more resources to support members and before and after retirement, and continue to enhance and expand our retirement offer.
Thanks, Renee. The next question is, how is Vanguard Super going to drive growth in 2026 while managing costs? Peggy, can you please respond to that one?
Well, as I mentioned in my comments earlier, Vanguard Super continued to grow strongly in the 2024-25 financial year, with membership increasing by 130% and funds under management exceeding $4.3 billion as of October 2025. So in 2026, growing our membership base and building scale will remain a key priority. We will continue to develop our distribution channels, including strengthening relationships with financial advisors. Importantly, every decision we make is guided by our commitment to delivering strong member outcomes. As we grow, we are focused on maintaining our position as a low-cost super fund. Building scale allows us to seek further efficiencies, and as Vanguard Super grows, our aim is to pass those benefits onto members through lower fees and improved services. And while we are proud of the fund's strong start, we recognize there is much more work to do. And I look forward to coming back next year and hopefully reporting another strong year of growth and progress for our members.
Let's hope. Yep. Next up, we have another investment question for you, Duncan. What is Vanguard's view on investing in unlisted assets such as private equity, which some other super funds are pursuing?
So let's talk about our house view on private assets. And sometimes I hear from clients, I need to be more diversified than just a portfolio of stocks and bonds. And I respectfully push back on that. Let's take stock of what a diversified portfolio really is today. Our life cycle and diversified options give you exposure to thousands of companies from around the world across developed and emerging markets, covering large, medium, and small caps. You're holding close to the total public market portfolio, and getting more diversified that is actually very difficult. And the global cap-weighted portfolio of stocks and bonds is a great place to start. If you want to do something different, you really need to have conviction to tilt away from that as your home base. Now, advocates of privates say they can provide superior returns to public markets, and that can be true, but there's a big difference between can do and usually do. While the top quartile of private managers can deliver outsized returns, the average private manager typically delivers underwhelming results after fees. That means you need to consistently pick top quartile managers, which is hard to do. And private can also come with higher risk, more complexity, less transparency, illiquidity, and higher fees. That said, the investment universe is expanding, and privates are an enduring theme. If you can access the top managers at low cost, privates can add value. And the Vanguard Group in the US is building capabilities in this space through some partnerships with HarborVest, Blackstone, and others. And there's nothing in the works for Vanguard Super currently, but we're keeping our options open, and we won't rule anything out if we think it can improve risk-adjusted returns for our members.
Renee, we have a question from a member about comparing super funds. Now, I think we can assume here that this member has another account with a different fund outside Vanguard. So they've written, I would love to be able to plug the results from my current super fund and compare it to how the same amount of money and same insurances would have fared at Vanguard Super. Renee, if you can take that one.
Yes, thanks, Martine. This is a great question because even small differences in fees and performance can really add up over time. And that's why we want to make it easy for you to compare super funds. Right now, you can use our website tools to calculate your total annual fees and insurance premiums, and then you can compare those with your current fund. But early next year, we'll be launching an independent comparison tool powered by SuperRatings. It will let you quickly compare Vanguard Super to other funds on fees, performance, and insurance, all customised to your age and balance.
Thanks, Renee. Now, the next one is a topical one on AI, Duncan. Given the rapid rise in AI-related equities and concerns about overvaluation, what is Vanguard's perspective on whether we're entering an AI-driven bubble?
There has been a lot of talk about whether we're in an AI bubble, but personally, I don't subscribe to that narrative. The ongoing wave of AI-driven investment is expected to be a powerful force, reminiscent of past periods of major capital expansion, such as development of the railroads, and in the late 1990s, the IT surge. Yes, US equities are stretched, but today's tech leaders are generating strong profits. That's a big difference from the dot-com era, when many companies had sky-high valuations without any earnings to back them up. So while valuations are rich, US stocks aren't necessarily in a bubble. That said, elevated valuations and profit margins do make markets more sensitive to shocks. We see two risks here: the already high earnings expectations and the tendency to underestimate how new entrants could disrupt the sector and drive down profitability. Volatility in the tech sector, and hence the US stock market overall, is likely to increase. If we see a recession, disappointing earnings, or geopolitical tensions, the downside risk could outweigh the upside potential. And if AI-related capital spending slows, that could also weigh on growth. Now, looking ahead, the Vanguard Group's models suggest that US equities may lag non-US stocks over the next decade. US valuations are stretched, but that doesn't mean a correction is imminent. But it does make markets more vulnerable. With increasing economic fragmentation worldwide, global market diversification becomes more important than ever. And finally, while AI has been a major tailwind for U.S. markets, its benefits won't be confined to the U.S. Over time, international companies, especially in developed markets, could see significant productivity gains from AI adoption. So that's why we believe a globally diversified approach remains the most prudent strategy, and that's what we try to do when building diversified portfolios for Vanguard Super.
Thanks, Duncan. Now the next question is for you, Renee. We have a member asking, is there a way that you can create fact sheets that have easy to find information useful for the best benefits of Vanguard Super? For example, how to set up beneficiaries.
So we've been working hard to make it easier for members to find the information that they need, and the Learn With Us section on the Vanguard Super website has articles, videos and case studies on a range of topics like consolidating your super, insurance within super and setting up beneficiaries. But just to specifically address the question around beneficiaries, you can add or change beneficiaries in the My Beneficiaries section of the app and the web portal. There's also a fact sheet there if you'd like more details.
Thanks. So the next member question is, can you provide a high-level explanation about how Vanguard manages the third-party service delivery model with Grow? Peggy, we'll get to you to respond to that one.
Okay, well, Vanguard Super's operating model is new and designed not only to prioritize members, but also to ensure our processes are quite straightforward. And Grow is the primary administrative partner of Vanguard Super. It provides the platform and the systems used to process and manage all of the super accounts. This includes account setup, processing contributions and transfers, updating account information, and handling member communication, such as mail services. Contact center and case management support are outsourced to Vanguard Investments Australia. For digital services, Vanguard designs the member experience and uses data insights to inform improvements, while Grow manages execution through its system. But the aim is to provide members with reliable and convenient service while ensuring processes are cost-effective.
Thanks for everyone for their thoughtful questions today. We're going to get you to answer the next one, Duncan. And this is a good one. How does the fund intend to navigate increasing international uncertainties, including tariffs and great power competition, on the capacity of the fund to ensure continued returns for members?
That is a great question. Global uncertainties like tariffs and geopolitical tensions can make markets feel unpredictable. And many people think successful investing means trying to pick the right stocks or time the market based on these events. But decades of research suggest these are fool's errands. The most reliable way to achieve long-term returns is through broad diversification and a disciplined approach to asset allocation. In fact, numerous academic studies show that over 90% of investment outcomes are driven by your mix of core assets like shares and bonds, not by market timing or picking individual winners. So we dedicate most of our effort to getting the asset allocation right. And history shows that volatility and downturns aren't rare events. They're just part of investing. Since 1972, there have been 13 bear markets in global equities, but bull markets have lasted nearly 4 times longer and delivered an average gain of 96%, compared with average losses of 30% in bear markets. That's why staying the course matters. Trying to time the market rarely works. In fact, 10 of the 20 best trading days in global stocks since 1980 occurred in years with negative returns, and 11 of the worst days happened in years with positive returns. So if you step out of the market during uncertainty, you risk missing out on those big rebounds. All that in mind, the next task is to find the cheapest, most efficient way to gain exposure to the major asset classes, which leads us to low-cost total market index funds. I think we can all agree that what really matters to investors is performance after fees, and we believe indexing is simply the most effective and efficient way to get core exposures. And the honest truth is, most super members don't know what their risk appetite is and how to set their strategic asset allocation to match. So we have put a ton of research into our glide path for our default lifecycle product to help you with that decision. It really takes the complexity out of things and can be a great starting point for most members. Ultimately, our goal is to help members stay the course, avoid costly mistakes, and benefit from long-term compounding, no matter what the news cycle throws at us.
So we know member experience is incredibly important, and the next question is about the app. Renee, when will a mobile app be available for the pension product? And when can we expect the app to be upgraded to offer more comprehensive portfolio performance insights?
Thanks, Martine. I know we received a lot of questions in advance about the mobile app and upcoming enhancements. For our pension members, we are looking at how we might align your mobile app experience with what accumulation members enjoy today. And on performance reporting, as I mentioned earlier, we are currently working on an update that will show investment returns at both the account level and individual investment level in both dollars and percentages. So look out for this update coming soon. We love getting feedback from our members on their experience, and it is this feedback that shapes our focus and our efforts. So please do keep the feedback coming.
So the next question is back to you, Duncan, on investments. Is there a current strategy or action to de-risk exposure to the Magnificent Seven?
Another great question, and it's one I've been hearing a lot lately, even at home. In fact, I just had a related conversation with my teenage son who was ready to load up his brokerage account with a few of his Mag 7 favorites on a recent dip. Now, for anyone who's not familiar with the Magnificent Seven, it refers to the 7 mega cap tech names. That's Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, and NVIDIA. And they have driven a huge share of U.S. market returns in recent years. They are incredible businesses, and they're innovative and exciting. But these qualities often come with a hefty price tag. Investors, drawn to the narrative and the numbers, bid up the stock price. And when prices rise faster than fundamentals, future expected returns tend to fall. That said, these current valuations represent the market's opinion about their fair value. Being underweight the Mag 7 would mean disagreeing with the market and lead to an active bet in the form of a style bias. So what's our approach? The markets are pretty good at pricing assets. So the most sensible investment strategy is capturing the expected returns of the market rather than trying to outperform them. And we don't try to outsmart the market by underweighting or overweighting these names, jumping in and out at just the right time. Instead, we stick to total market indexing and global diversification. From our perspective, that's just the most efficient way to capture equity returns. So in short, we won't try to time the Magnificent Seven or the US equity market for that matter. It's not that we can't, it's that nobody really can. So our approach is to build and to stick with a globally diversified portfolio. And for the record here, my son eventually landed on a high-growth diversified ETF instead of betting it all on a couple of stocks, and it was a proud dad moment for me.
Thanks, Duncan. Not only an expert in investments, but also parenting. Thank you. We have time for a final question, and Peggy, I will hand over to you for this one. It's about retirement. And the member asks, there's been lots of media reporting on the inadequacy of the super industry to prepare for the massive increase of baby boomers who are now moving into retirement phase of superannuation. The articles have highlighted that the drawdown process is complex and frustrating. What is Vanguard doing to lead and establish best practices in this regard?
Oh, well, it's clearly a significant issue and the focus for the industry and one that has become increasingly important. Vanguard Super launched its retirement products in 2023. As our membership grows and matures, one of our key priorities is continuing to enhance those products. We want to make the drawdown phase as simple as possible for our members. And as Renee has touched on tonight, we're also expanding retirement education resources, introducing advisor referral capabilities, and improving the tools and calculators we have for our members.
Thanks, Peggy. And thanks to our panellists, Renee and Duncan, for your time tonight. We'll wrap the Q&A up there, and I'll pass over to Peggy to close tonight's meeting.
Thank you, Martine. And also thanks to Renee and Duncan for your contributions this evening. And on behalf of the Vanguard Super Board, I'd like to thank all members who submitted questions. The Q&A session is an important opportunity for us to learn more about what matters to you when it comes to Super. We hope the responses tonight have provided some clarity and useful information. And we acknowledge that we couldn't address all the questions in this session. So as mentioned, responses to outstanding questions will be included in the meeting materials, which will be published online shortly. You will see on your screen a feedback form, and there are 6 questions. And we'd appreciate you taking a moment to complete the survey, as it will help us to improve next year's meeting. We'll also provide a link to the survey in an email, which will be sent to you shortly. And that brings us to the end of tonight's proceedings, and thank you again for joining us. We appreciate your time and your participation. Thank you.